If you stay present and watch this entire program and then apply the principles I'm sharing within your business over the next 5 years, I believe you will see exponential and massive growth within your company. This serves as a way and a means to mitigate some of the risks that are involved with our current financial system and ways that you can increase revenue, brand awareness, and so much more. So we are going to be going over a program that I put together called Architecting the Future of Finance. So this involves initial coin offerings, decentralized finance, and an alternative financial solution outside of our traditional financial system. So this basically applies to most businesses, any business within the revenue of £1 million plus a year. You can still apply this to your small business, but it is more tailored towards larger businesses. But this is a full training and full educational program on how you can launch an initial coin offering and position your company for the future of finance. Welcome to Divine Group's Architecting the Future of Finance initial coin offerings. So we are going to go over in this program everything that you will need to know regarding launching an initial coin offering for your small or big business. There are many reasons now to look towards going public within the cryptocurrency markets to increase brand awareness as well as revenue. And we're going to go into everything and how to do that to position your company for the future of finance and the global macroeconomy. So we're going to start by going over the reasons for this program, as I believe this will set the tone for the rest of the program to really understand where we're headed and why you would want to launch an initial coin offering. So we have dollar debasement, which basically means the US dollar loses its buying power. This usually happens when more money is printed without a corresponding increase in the economy's economic output. When the dollar's value drops, things become more expensive in dollars. Even if something's actual value hasn't changed, its price in dollars can rise. It's like a seesaw. When one side, the dollar's worth, goes down, the other side, the price of things, goes up, making it seem like they're getting more valuable when in fact the dollar is just worth less. Our financial system works on debt and it works on income. And we see this through fractional reserve banking, and we understand that the central banks issue a liability and we have the obligation to eventually pay that liability back. There will always be more debt than income because that is just how the mechanics of the system work through the modern money mechanics. But in 2008, we saw a financial crisis, and this is where debt got far out of control and the commercial banks and central banks couldn't handle, regulate, and manage the risk of this debt. And this led to people losing their businesses. We saw the credit crunch where you could barely lend any money from the banks to keep your business afloat. And this was a complete nightmare for basically everyone. And we have seen the inadequacy, and we've seen that the regulatory and risk management practices have fallen apart before. And all they've really been doing since 2008 is just restructuring and refinancing this out of control debt. So there is a underlying elephant that is in the room, which is all of this debt, and that is why we basically see dollar debasement. So dollar debasement is where people are analyzing the dollar and they're looking at the actual value that the dollar holds, and then they're looking at other assets and other ways and means of storing and valuing their wealth, and then they are basically allocating to other assets, and the money is coming out of the dollar, and basically investors are just losing faith in the dollar. And that is why we see the illusion of rising asset prices, because the dollar as a whole is just decreasing in value. And while the refinancing and restructuring of this debt can provide short-term relief for the economy, long-term, there's just basically no solution to this. And eventually the currency is probably just going to go to nothing. So when we look at the majority of global financial markets and the equities asset class, believe it or not, when we're seeing these stocks and the S&P 500 go up exponentially against the dollar, it's not necessarily that the S&P 500 is going up exponentially. Sometimes it can actually be an illusion of rising asset prices due to the fact that the dollar is decreasing in value. So that is one thing to consider when we are looking to launch an initial coin offering. We need to look at substitutes and other ways and means away from the dollar to position our business and exchange currency. Especially if anything was to happen to the dollar, this would definitely affect all of our businesses. So positioning for the future of this and taking it into account is definitely something that we want to keep on our mind. Carrying on the topic of dollar debasement, traditional assets may seem to rise in price, but in reality, their true value may remain the same or even diminish. Cryptocurrency and technology, however, have shown potential to not just keep up with this debasement, but to outperform it. This is because they represent innovative, forward-thinking sectors that are not just reacting to the dollar's decline, but are growing in their own right due to increasing adoption, technological advancement, and a global shift towards digitalization. So when we study the network and adoption curves and effects within cryptocurrency, they are being adopted, and the network effect is definitely taking place within this sector. And exposing our business and positioning our business within this is definitely going to give us an edge within the next 5 years. Business owners are suffering from dollar debasement as it erodes the value of their money. When the purchasing power of the dollar declines due to inflation and other factors, it can lead to higher operating costs, including increased prices for raw material, labor, and imported goods. This can squeeze profit margins and make it difficult for businesses to maintain profitability. Additionally, dollar debasement creates uncertainty, making it challenging for business owners to plan for the future and make informed financial decisions. So we have a few potential solutions around this issue. So we have the central bank digital currencies. These represent a significant evolution in the world of digital finance and central banking. These currencies are issued and backed by a country's central bank. So similar to the dollar and the pound at the moment, not necessarily any intrinsic value behind the central bank digital currencies other than the government and the enforcement that can potentially be in place when they do look to roll these out. So these serve as a digital representation of a nation's official currency, such as the US dollar or the euro. The introductions of CBDCs aim to modernize payment systems, enhance financial inclusion, and address various challenges posed by the growing adoption of cryptocurrencies and the decline of cash usage. It's very difficult to navigate the social economy and to keep a financial system where everybody is actually able to survive and which is fair, transparent, and efficient. But after seeing the 2008 financial crisis and understanding centralized institutions, it definitely just starts to put things into your mind and make you wonder, what other solutions are there on the market and how can I position myself for the future of finance? Because I personally believe that the future is bright, and I believe there are many other solutions that are on the market, and that is why I put this together to your attention. So these lines of thinking are at the front and center of your mind, especially when you are looking to build a sustainable business and position yourself for the future to make sure that you are staying ahead of your finances, your income, and providing the best possible solutions for your clients. So this is a potential currency that is on the cards over the next 5 to 10 years. So this is currently being actively researched by the central banks, and they are trying to potentially propose a digital currency which will be built on the same technology as cryptocurrencies that we will all look to adopt and replace the dollar and the pound in just a fiat money currently. So this is something that we want to position and be aware of, especially when this does roll out. There's definitely going to be implications around the global macroeconomy because obviously the underlying medium of exchange that we are all using is going to change. So there's a few problems with the central bank digital currencies from my research. So we have loss of privacy. This is a potential effect that the central bank digital currencies might have. I also do see on sort of like the Bank of International Settlements, which is the settlement institution for central banks. So they are actually saying there is going to be privacy solutions, a form of digital cash over the next 5 to 10 years. So the BIS came out with the Project Turbulent or whatever it's called. So basically privacy solutions as they probably look to mitigate cash. When I really think about this, when you have public blockchains and you already have privacy solutions on the market, I mean, it's always well and good to always have another one, and diversification is key. So I guess this is definitely a good thing, and it's always good to stay up to date with what is taking place and the advancements within some of this new technology. As you can see, the BIS, who manage the central bank's settlements, so basically they are in charge of basically the entire financial system. It's good to see that they are taking an innovative approach themselves, but it still does make you wonder why they're not just potentially looking to build on public blockchains and actually disintermediate themselves. Because when we analyze like regulation technology and the technology can basically become self-regulating, we can potentially disintermediate these. Again, it's always good to diversify, so I do think it's nice to also have the centralized institutions in place if we need them. So negative interest rates, this is one that concerns me as we move more towards being able to program our money. The uncertainty of the money and the functions within the programming is definitely something that we want to be aware of. So freezing funds is a massive issue currently. If you are in the UK, I'm not sure what it's like potentially in the US, but in the UK, from some of my friends, what I'm hearing is they are freezing and seizing funds out of nowhere, and then they are pressuring you to do KYC, AML checks, and that is all well and good. But again, if we go more towards regulation technology and we self-regulate through different technological solutions, then I definitely think this poses for a more efficient way of doing things. It's like, let's say that your bank account gets frozen and you have your bills to pay, and then you're on the phone, you're also wasting your time and energy, which equates to money. It's definitely just another issue with centralized institutions. So PayPal have came out and they released a stablecoin recently, and inside of that smart contract, they have a freeze function. And I imagine as we move more towards the technology that the banks are going to start using, we're probably going to see these type of functions in the code and the smart contracts. So again, it's just really understanding and educating yourself on the best places to store your money. So if they input certain functions tied to the money, sort of what they're doing within cryptocurrency at the moment and giving tokens utility, what I'm basically getting at is they can change the rules whenever they like. And let's say you have a bank account, and let's say they can start to introduce a negative interest rate on your money. This is something that could potentially be on the card. So this is one proposal and solutions. And so far, the central banks have maintained control and authority and a means to organize and keep societies in a place where we can all agree and negotiate a medium of exchange and use a trusted currency globally. So far it has served their purpose. So another thing that we want to concern ourselves with is bank runs. So this has happened in the past many times, questioning what bank are you actually using? What is the intrinsic value behind your assets and collateral? So the problem with the central bank digital currencies is there is no intrinsic value backed by them at all. This is something that definitely is potentially not the best place to keep your assets and money over the next few years. We also have the social credit systems. So this is being actively researched as well. So some governments have shown interest in implementing social credit systems that use financial behavior as a basis for assessing an individual's trustworthiness. So this has already really taken place when you look to get credit out of the bank if you do not have a good credit score and a track record of trusted financing and payments. Corporate lending is extremely hard, and with more data and transparency that these central banks will have over your payments and be able to see everything that you're doing, your social credit score will definitely be impacted, and you probably won't be able to hide any assets or anything like that if we are using this technology. So CBDCs could be used as a tool to enforce such systems, granting or restricting access to financial services based on an individual's social credit score. So we have financial restrictions. Governments could use CBDCs to impose restrictions on certain transactions or categories of spending. For example, they could limit the purchase of specific goods, services, or investments deemed undesirable or politically sensitive. So this is something that we don't really have much control over. Again, we don't want to be limited to what we can actually purchase. So a few thoughts regarding the central bank digital currencies. I believe as a medium of exchange and unit of account system, then there definitely is the use case, and it's a regulated means for us to transact, but there are definitely some concerns considering they can also potentially freeze and seize your funds. And as the transparency continues, and if they do mitigate the commercial banks, meaning we don't have the likes of Santander, HSBC, and we're just going directly to the central banks for banking solutions and payment solutions, then freezing and seizing funds is something that isn't necessarily in our control. And then this is sort of where human rights kick in, and when there is a discrepancy in the way that we think what is accepted, politically sensitive, etc., it just doesn't give us as much control as we would potentially like. So this is a massive issue even with the fiat currencies at the moment. So moving on now, negative GDP. So just a couple of thoughts on negative GDP. Negative GDP indicates that a country's economy has shrunk compared to the previous measurement period. It means the total value of goods and services produced by the country has decreased. So we have the fix, which is we obviously need to increase productivity and economic output. And in my opinion, the way that this is taking place is through technology and artificial intelligence. So we're actually leveraging these things to provide us with a way to stimulate the economy and produce more output within our businesses. So again, I know it's boring, but the advancement towards technology within finance and the economy is definitely something we want to be positioning our businesses for. And through this program, we're going over all of the actionable steps and ways and means to generate and increase revenue through initial coin offerings. So how does this benefit your business and how does this play a role within what you're doing? So using financial technology to maximize revenue and brand awareness to play your role in economic output, moving towards a more sustainable infrastructure. So what we're going to be doing is utilizing alternative financial solutions, and we're going to be increasing human productivity and output through more revenue and brand awareness. So when we launch an initial coin offering, you are doing both of these things. So now for the philosophy behind decentralized finance and why we would want to use this alternative financial solution to promote more income within our company, as well as go public and basically disintermediate the investment bank. So when you were to launch an initial public offering, which we're going to get into the definition of an initial public offering, but just briefly, it would cost hundreds of millions of pounds, and you'd have to use an intermediary, which is the investment bank, to actually launch and go public within the stock market. Whereas now we can do this on a very small or large scale through computer science and new technology. And this new technology is in the form of decentralized finance. So DeFi is still in its pioneering stage. So there are many different problems that DeFi poses. And we've already seen that with the likes of Luna, and we're seeing the hacks that are taking place even on the ledgers. It's definitely a Wild West type of environment at the moment, but it definitely is in the pioneering stages of the future of finance. This is obviously a given, as you're seeing the commercial banks and central banks using this technology, and they're already taking principles out of decentralized finance and then trying to apply it to a more broader global financial system. So as it's still really early, it makes sense to position your business in this environment so it starts to flourish and you really do start to see the exponential growth within this sector. So similar to Bitcoin in 2013, the information that I am outlaying here, I genuinely do believe within 5 years, this will just be common knowledge and the majority of businesses will be built upon this technology. Decentralized finance, often referred to as DeFi, is a new approach to finance that uses blockchain technology to bypass traditional financial intermediaries like banks and offers financial services directly peer-to-peer to users. So we can go straight to going live within the cryptocurrency market, and we can facilitate ways and means for individuals to invest in your company without having to spend the hundreds of millions of pounds. So instead of going through the centralized institutions, people can now lend, borrow, trade, and manage their assets on platforms that operate on open sourced software and are governed by network participants. So we govern the system as a whole. So rather than having the central bank that controls and the investment bank that controls how the financing takes place, and they are regulating every movement within your company and what you are doing, we can now be governed by a large amount of participants rather than a centralized institution. So this definitely democratizes finance. It makes for a more inclusive environment and reduces costs and controlled by traditional financial entities. So what is an IPO? The definition of an IPO is when a company offers stocks to the public. A company does this for several reasons. It's to raise money for company growth, and it's also to liquidate private investors. So people who invested in the company will get a revenue of the shares, or they will have shares that they can then liquidate on public markets and secondary markets to retail investors. So this is basically a way for private institutional investors to liquidate their shares to public investors in a regulated way. So that is what an IPO is. And this has been taking place for many, many years now. So The company will need to undergo regulatory and compliance reviews to ensure its eligibility for an initial public offering. Typically, an intermediary, such as an investment bank, is employed to facilitate the issuance of stock onto the stock market. The company and investment bank will then decide on its valuation, determine the IPO stock price, decide the quantity of shares to be made available, and establish the percentage of ownership to be represented by these shares. But an initial coin offering is when a project or company offers a new cryptocurrency token to the public. So the same reason people might do this with the investment banks is the same reason you would do this within the cryptocurrency market. So a company does this to raise capital for the project's development, and it's to distribute the tokens to a wide user base to foster adoption and increase brand awareness. So the way that an ICO works is the project or business will typically provide a detailed white paper outlining the purpose of the ICO. So how it works and the total supply, similar to how they are deciding IPO share prices and how many shares that will actually be on the market to buy is similar to what will be listed within the white paper. So unlike an IPO, ICOs may not always undergo rigorous regulatory scrutiny. ICOs are a fraction of the cost compared to IPOs. So IPOs, you go to the investment bank and then they will quote you within the region of 100 to 150 million pounds. That is not really viable for many small businesses, whereas you can come along and do an ICO for as little as 10,000, 20,000, but if you want to take it seriously and actually gain publicity through marketing, then you're probably looking at within the region of £1 million. Though this is definitely changing as regulations evolve. So we are normally using the intermediary of the blockchain, trusted ledgers, and all of this fancy technology that allows us to do exactly what the investment banks can do for us, but through the use of technology being the intermediary. So technology acts as an agent that facilitates this in a fair and trusted way. That is basically what blockchain is all about. So the project team and the business will then decide on the valuation. It will determine the ICO token price, decide the quantity of tokens to be made available, and establish the percentage of total token ownership to be represented by these tokens. So similar to how they do it with an IPO, you use something called a white paper document, which will outline all of the ways that you will look to go public within the cryptocurrency market. Tokenizing traditional business. So how has this been taking place over the last few years? There are many big entities and businesses that are like-minded and understand the technological advancement and see the opportunity within initial coin offerings. So tokenizing your business will provide you a way to preserve and grow. As I stated about the dollar debasement and all the things that are currently wrong with the traditional financial system, this is definitely a hedge and an alternative way to preserve and grow value. Tokenizing aspects of a business can help shield it from the declining purchasing power of fiat currencies. As the business grows and gains adoption, the intrinsic value of its tokens can increase independent of fiat currency dynamics. So this is a way to basically mitigate the systemic risk of fiat currencies. So if anything was to happen to fiat currencies and they were to sort of collapse, or they just aren't worth anything, similar to what happened in Weimar Germany, hyperinflation, etc., this is a way and a hedge and a means to prevent your business from being affected by this cause. You can go, okay, this has happened. I also do have this avenue to explore. And this is definitely one of the main use cases of launching an initial coin offering. So it also fosters innovation and flexibility. Tokenized business models enable businesses to design their tokens functionality tailored to their needs, be it governance, dividends, utility within a platform, or other innovative mechanisms. So there is constant ongoing research on how you can actually innovate within the tokenomics. So within an IPO, it serves a couple of use cases. And them use cases are what I just outlined regarding liquidating shares for private investors to public investors and basically making money out of going public. Whereas with this, we can actually program the ICO in a way that will innovate and provide flexibility. And there are so many things you can do with computer science. So there is lots of research and things to explore that can definitely provide value to your customer base as well as increase income for your business. So It serves as a way to fundraise instead of traditional financing or even equity sharing, because normally when you go to venture capital companies, you would have to give them an equity share for a percentage of your business, whereas now you can actually raise money by issuing tokens. And these tokens are standalone ways of raising finance. So you can raise money on the tokens rather than giving someone an equity share in the business that's generating revenue. They can buy into the token, they can buy into the utility of the token rather than the underlying business it's tied to. This is also quicker, more efficient, especially if there's a compelling value proposition behind the token. And we're going to get into that in a minute. So how are we actually going to achieve launching one of these? I'm going to guide you through a comprehensive roadmap and process to innovate your business. We offer your business a structured framework to not only create a fresh revenue stream beyond your existing business model, but also boost brand visibility. Moreover, this approach serves as a protective shield against the introduction of central bank digital currencies, and it's positioning your business in a place for growth, which will be in sync with the evolving economy. Really appreciate all of you watching. Hopefully you found lots of value from this and that you are enjoying Architecting the Future of Finance initial coin offerings. This was program 1. We're going to really dive deep into how you can position your business for the future of finance and how to launch an initial coin offering. I'll see you in the next one. Welcome to Divine Group's Architecting the Future of Finance initial coin offerings program 2. So in this program, we are going over a high-level overview of exactly how to launch an initial coin offering. So we're going to break down step-by-step every process and thing that you need to contemplate when launching an initial coin offering. So this is basically the roadmap from ideation to completion and the actual launch. So we start off with the concept, narrative, and idea. So we have to play on a concept and a narrative to intrigue investors to actually invest in the ICO. So we're going to go over some best practices within this full training as to how you can find a concept, a narrative, and an idea that investors are interested in. Then we're going to look at the white paper development, exactly how to construct a white paper. Again, this has all of the information which will push investors over the edge into buying into your initial coin offering. We then have the marketing and networking. This is paramount for any business. As you already know, marketing and networking is key to success, and nothing changes when it comes to your initial coin offering. Marketing is half of the battle. Telling people and getting eyes on your initial coin offering is going to dictate the success of the coin offering. So then we also have the token economics. So tokenomics are an innovative way of building an economy around your business. So the tokenomics are, as they state in the title, token economics. So this is a philosophy. This requires quite a lot of research, or you can just keep it basic depending on what your objectives are for your company. So the tokenomics, we're going to go into lots of detail regarding making, distributing, and constructing the tokenomics. We're going to go over the benefits of Web3 and DeFi. Then we're going to get into the software development. And then we have a security audit to make sure that there are no hacks that can take place within your initial coin offering. You want to make sure that the code is secure and has been audited by professionals before you launch to mitigate any risks and loss of funds for investors and yourself included. And then we also have the legal jurisdiction that you will launch and exactly how to launch. So we'll go through some legals as well. And then the actual launch. And then finally, the post-launch roadmap and what the roadmap for the company looks like after the launch. Starting off with the concept, narrative, and idea. So defining a compelling concept or narrative is crucial for any project. It involves creating a clear and captivating story that communicates the business's purpose and vision. This narrative sets the foundation for the business's identity and helps connect with potential users and investors. So you're probably familiar with the metaverse narrative, the gaming narrative, as well as the artificial intelligence narrative, as well as the quantum narrative. All of these narratives basically play on global macroeconomic events that will allow you to definitely gain traction and ride a trend. So similar to the dot-com boom, a lot of these initial coin offerings played on certain narratives to pump the price up. I'm not saying this is something that you need to do for your company, but this is something that you definitely want to understand that an emerging asset class and market such as cryptocurrencies and digital assets do solely rely on narratives at the moment, as fundamentals and value investing is something I believe will happen when this market matures. But for now, concept, narrative, and idea, the reality is that this plays a massive role in the success of the initial coin offering. Financial markets have always had an element of behavioral finance behind them and social psychology. So most people actually position on what they believe other people are going to do. So a lot of the speculation and the positioning within the financial markets actually takes place because people are betting on what other people are going to do. So when it comes to your company and the fundamentals behind your company, especially when it comes to the tokenomics, you can have some of the greatest tokenomics, and sometimes you don't actually see this priced in for a good few years, or that's where the mispricing and potentially the opportunity lies. So when you hear people call themselves a value investor, this is exactly what they're referring to. They're referring to investing in the value and fundamentals of the business rather than just the speculation surrounding the assets and financial markets. It's always a good idea to understand that behavioral finance and psychology and societies play a massive role in the price dependency of a currency and an asset. So George Soros had the theory of reflexivity. This was his work over 30 years, and he is a billionaire from financial markets. He shorted the pound, and he states and has done a lot of research in behavioral finance, and he came out of a theory that shocked economists, as economists believed in classical economics, and they also believed in supply and demand dynamics and did not equate for what George Soros believed in, which was the behavior of people. And when we really think about it, it's just common sense that humans will dictate the price of the asset, and the actual thought processes behind people have a massive impact on the market. So this is something to consider when it comes to structuring your tokenomics and having a successful ICO. A lot of it is speculation. A lot of it is people gambling on other people. So it's definitely something to keep in the back of your mind when it comes to drafting your tokenomics and positioning your ICO for success. So we will go over this in the program. So a concept just refers to the underlying idea, product and service that the ICO is promoting and seeking to fund. The concept represents the fundamental idea the ICO intends to bring to fruition, which could be anything. Regardless of your industry, you can launch an ICO, and that there are ways and means and reasons of doing so. So the way that we portray the concepts to the user and consumer and investor is going to greatly depend on whether they invest. So the perception that you bring forth to the investor and the way that you market it is fundamentally going to drive the initial coin offering and make it a success. So if you are in industries that potentially have a flat CAGR, so there's no actual growth within that industry, but there's also no decline, so it might potentially make the investor believe that there are other places to put their money. You really want to play on the concept, narrative, and idea and create a story surrounding your ICO. So Abraham Lincoln says you should spend 80% of your time sharpening your knife and 20% of your time actually going through the process and delivering on what you are looking to take action on. So 80% of the time, you should focus on the idea, the concept, and the narrative, because this is basically the backbone of your entire initial coin offering, and then focus on the 20%, which is more so the software, the marketing, and having a successful launch. The concept, narrative, and idea is very, very important, especially in this emerging asset class, and the way that people behave definitely does play a massive role in the success. So positioning yourself in a place where the consumer and investor believes, and you also believe, is going to be a growing sector in the next 10 years is 100% going to help you along the way. So then we have the white paper. It outlines its objectives, technical details. It has the tokenomics in there. It's a comprehensive document that provides transparency and builds trust with the community and investors, offering a detailed view of the project's inner workings. So the white paper will disclose all of the information. It basically serves as a due diligence document, similar to if you run a private equity fund, venture capital fund, or a hedge fund. You will want to conduct due diligence if you are investing in anything, and the white paper serves as a due diligence document for the client and investor to read through, to understand and answer all of the underlying questions and potential concerns that they have. You must leave no opaque processes inside of the white paper. The white paper needs to be transparent. It needs to have all of the instructions and details surrounding your business, your initial coin offering. You can add the revenue of your business, the earnings, the projected revenue, everything regarding your business needs to be on here. So you have people that refer to a white paper that has no information on the underlying founders and people that operate the company. So this is called within cryptocurrency when you are not doxed. And then when you are doxed is when you have the team on the white paper and everything is transparent. You definitely don't want to be going down the road of not declaring who you are, because this builds little trust and does not incentivize the investors to really take your project seriously. We need to make sure everything is transparent. A lot of the launch pads, which is something we'll get into in the few programs to come, but a lot of the launch pads require KYC, AML checks. This is the norm. So everything needs to be above board. If you're looking to a multi-million pound ICO, then you definitely need to make sure that everything is transparent and that people can know, like, and trust you enough to invest in the ICO. Think of it as the instruction manual to everything that you're doing. So a lot of people also add in the white paper the roadmap and things that they are going to deliver on. In my opinion, I believe you should mostly just focus on what you've built, and the things that you're planning to build can potentially be listed in a section that even states this is what we plan to do. A lot of ICOs have gotten away, and a lot of white papers have gotten away in recent years with basically just lying about what they're going to deliver on, as it's an unregulated market, and then this just leads to bad speculation. It leads to unfair pricing of the asset, and it just basically leads for a shit show, if I'm honest. So we don't want to be doing that. We want to make sure everything's transparent. We are trying to build for the future, hence the name of this program, Architecting the Future of Finance. We're not trying to play on these narratives of Ponzi schemes and just generic capitalism. And obviously, we do want to provide a good service. So we're going to go through everything to do with constructing white papers. Then we're going to have a marketing and networking program. So this will go over the effective marketing and networking strategies that are essential for promoting the ICO. Building a strong community and attracting users and investors is crucial. It involves strategies to reach the target audience, create the brand awareness, and establish valuable connections within the industry. Marketing inside of Web3 is very similar to traditional marketing. There is also niche-specific Web3 marketing. So Twitter plays a massive role. Crypto Twitter is one of the biggest marketplaces for getting eyeballs. So a lot of people will use Twitter, and the other thing that you can leverage is your personal brand. So if you are an already established entrepreneur or have a company brand that is very big, let's say you are Nike, for instance, you can launch the ICO and you can market through your business or your personal brand. So when you look at many influencers, they have partaken in a lot of cryptocurrency, ICOs, and NFT projects. With this comes a few things to consider. You definitely need to make sure that everything that you are doing is transparent, because the last thing you want is to be called a crypto scammer and end up with a lawsuit from the SEC or some sort of a court case. That is not what you want. The way that you mitigate this is by making sure that the project is regulated. If you are in a jurisdiction that requires regulation, there are ways of structuring the company and ICO in a way that actually you are not in centralized control of the project through something called a decentralized autonomous organization, which I will get into in the next few programs. But marketing techniques, mostly Twitter is used for personal branding and business branding. You can also leverage other people's personal brand or business brand, and this way you can pay them to market your project, to get eyeballs, to then turn them eyeballs into potential investors or contributors and participants in your ICO. Again, when it comes to the word investor, can be a gray area. So you want to understand your wording and really understand who you are talking to and what your purpose of the ICO is. So there are security token offerings, and you also have initial coin offerings. So security token offerings are regulated securities that are put on the blockchain. A coin offering can be anything. It can be a gaming token. Depending on what industry that you're in will depend on whether it is a security. Most cryptocurrencies in the US, I believe it's around 85% of them are not deemed securities. This is definitely something that you really are going to want to understand before you launch the token. Mostly you will be okay, especially with decentralized autonomous organizations, and understanding that you are a core contributor to the ICO, meaning that you do not actually take control and you are not in the centralized governance of that given token. So you actually relinquish governance and you allow for many network participants to play a role in the ICO, and this way you are not accountable if anything goes wrong. This is the nature of decentralized autonomous organizations, and depending on your business vehicle will depend on whether your token is listed as a security or just a coin. Let's say, for instance, that you are a trucking company and you need to sell the trucks, or you need to raise the finance to buy the trucks. The pre-sale investors is a perfect place to actually get the finance before you launch the coin. This way, it funds the business and project development before you have actually launched the project and made the money that way. So pre-sale investors is fundamentally one of the profit driving factors as to why you want to launch an initial coin offering. And we're going to get into all of this in the next few programs. I just wanted to outline that pre-sale investors are massive within this process. So you'll want to potentially partner with other people that facilitate ICOs and other companies within DeFi who make our lives easier when it comes to launching an initial coin offering. And we're going to cover all of this in the marketing and networking session. Now, briefing on the tokenomics. So tokenomics define the economic principles governing a cryptocurrency or the token. So it addresses token creation, distribution, utility, incentives to hold the token, and the governance of the token. So as I stated in the introduction, a lot of centralized institutions take control of the governance, but through innovative forms like decentralized autonomous organizations, there are many different governance mechanisms that you can introduce into your business's economy. Pre-sale investors are similar to institutional investors inside of initial public offerings. So what you would do is you would normally sell the tokens over the counter to raise money to actually do the launch. So the way that this works is you have a liquidity pool. So think of it like this. You have the tokens and then you have the US dollar value equivalent, and you are basically pricing the tokens against the US dollar in something called a liquidity pool or an automated market maker. So in this liquidity pool, you need to be able to raise the finance on the other side. So these tokens basically are computer code. They come out of nowhere. You basically create the intrinsic value similar to the central bank digital currencies or even the fiat money, as they obviously sort of just print it when they reduce the balance sheet of the Federal Reserve balance sheet. So what we're basically doing is we need to find the other side and provide liquidity to public investors. So hopefully that was nice and clear. So the way that we find the liquidity, the US dollar on the other side, for people to actually exchange this currency, because think about it, if no one is willing to sell or give you USD for the token, you basically can't sell it. It's an illiquid asset. It's not worth anything. So the way that we raise the liquidity is through private investors. And the way that we do this is sell them the tokens over the counter. So we'll draft up a document that I will share, which is called a SAFT agreement. And with this SAFT agreement, basically what we're doing is we're selling the tokens over the counter to investors at a cheaper price. So they get it at, let's say, the launch price of the token is $1. So one token equals $1. You can sell and have an agreement and a document in place with private investors before you've launched, saying, I will sell you the token before we launch at 30 cents. And then you sign that, you basically give them the guarantee that you're going to give them tokens upon launch at 30 cents in their wallet. So you get sent to their wallet. And then basically the pre-sale investors are a very, very good way to raise finance and secure profit before the launch. So this is something that you can model, understand, and really get granular on what you believe will define your company and the beliefs surrounding your company and economic thesis going into the future. So understanding tokenomics is vital for evaluating a project's long-term potential and sustainability. So a lot of sophisticated investors will look at the tokenomics and they will decide whether they want to invest, because if you have something called a vesting schedule, for instance, which is how many tokens are being released by the smart contract over a long period of time. So let's say that the supply of the tokens increases over time. That's definitely something that will cause a price depreciation. And this all comes down to how you have modeled your tokenomics. So tokenomics is a massive program in and of itself. Tokenomics are the architecture behind the entire project. So the way that you architect the tokenomics and the token economy is going to depend on whether your project actually has value. Tokenomics are extremely important. So going through and making sure that you have a person who is very well versed in understanding what makes a good token and what actually provides value to investors within your ICO is going to be paramount to the success. So tokenomics are the best way to create value and provide abstract innovation within finance in the last few years. So you can play around, understand some of the mathematical models and the distribution, the scheduling, and the supply and demand dynamics of the given project. So you can come along and decide all of these rules and laws, and that is the beauty of Web3 and decentralized finance. Or you can keep it really simple. So if you are just looking to provide equity of your business, as I said, you don't have to, but if you do want to provide equity and work on a dividend share similar to a stock market, then you put this inside of the code base and the tokenomics. So the tokenomics is basically just computer code that dictates the supply and demand dynamics of distribution of the token. So tokenomics is very important and definitely something to make sure that you get right and not just copy someone online or copy some code base. It's definitely not what you want to be doing. You want to be thinking these through. So we're going to go through everything to do with the tokenomics, and I will leave a spreadsheet on modeling tokenomics. It's basically similar to financial modeling inside of traditional businesses. So if you are familiar with financial modeling, then you will find tokenomics not too difficult to wrap your head around. Next, we have the software development. So developing the project and ICO software infrastructure is a critical aspect of its success. This includes building on the blockchain, writing the smart contracts, the user interfaces, and other necessary technical components to ensure the project's functionality and security. So the software infrastructure is key to the underlying performance of the initial coin offering. It's basically the backbone and it's the bricks of your house when it comes to launching on the blockchain and building your business on the blockchain. So next we have security audit and legals. So conducting a thorough security audit on the software is essential to identify and rectify vulnerabilities in the project's code and infrastructure. There has been hundreds of millions lost within this industry. So it is vital to make sure that you are not going to lose your potential investors' money, especially after the launch. So let's say you launch and you raise 5 million over the counter in the pre-sale and people are holding them tokens, believe in the project, and then 3 months down the line, someone finds a vulnerability in the code, exploits it, and then drains all of the investors' funds. And that is not a good situation to be in, especially when you have marketed, networked, and built your reputation up. The industry currently lacks regulation. So this is evident from all of the rug pulls that have taken place in the last few years. So the way to prevent this for your company is to regulate yourself. So how do you regulate yourself? You need to make sure that the security auditing and the professionals and the software developers are professional in what they're doing. The last thing you want to be doing is launching a coin and getting the money from investors stuck or potentially even robbed. So instead of skimping out on the 40,000, 50,000 it costs to pay a cybersecurity professional, you can end up losing 500,000, millions, 10 million, 20 million. People have even lost billions. So it's definitely something that you don't want to look over. The regulation surrounding the industry is quite scarce. So you want to take it upon yourself to really regulate your own ICO and allow for professionals to audit and prevent any hacks from taking place. There are many people within the DeFi and Web3 industry that are actually good actors and that want to help your project and want to see the success. You just have to find them and pay the price, because you can end up paying 10 times the price if not. You definitely do not want to be getting your investors' funds drained and liquidated. So we need to address this through legal compliance, and it's also crucial to navigate regulatory challenges and ensure a legally sound operation. So you want to make sure that everything is above board. Again, we don't want any black hat hacking taking place and then draining our funds. Then we are going to launch. And then after the launch is a great success, we are then going to start to work on the post-launch roadmap. So after the project's launch, a well-defined post-launch roadmap guides its future development and growth. It outlines milestones, upgrades, and expansions, ensuring the project remains dynamic, and responsive to users' needs and market trends. So the reason we want to outline the post-launch roadmap and have a vivid image of where we want the business to go is to make sure that investors feel safe in the longevity of your business. You don't want them to ride the trend of the ICO when you launch and then end up selling all of their tokens, and then it just ends up like a pump and dump chart. What you want to do is have long-term growth, and a lot of this can be dictated by the tokenomics and the earnings of the company if you are to tie the earnings in with the tokenomics and the company. So the benefits of DeFi. Again, we're going to run through this quickly. So ICOs, investors generally do not acquire ownership or equity in the company or project. This depends on how you want to structure your tokenomics and ICO. You can give equity away if you want, but one of the benefits of Web3 is that you do not have to do that. You give them a percentage of the supply of the tokens rather than a percentage of equity within the underlying company that the token is launched on. So investors receive tokens that may have utility within the project's ecosystem. They don't have traditional ownership rights, whereas an IPO is when the investor purchases shares of stock within a company, which represents ownership and equity in the business. Shareholders have voting rights, and they also normally receive dividends. We can also pay out dividends in the form of tokens, but again, it really depends on the initial coin offering, what you're trying to establish with your project, and there are many innovative ways of bringing incentives and values within this space. There are new ideas and models of tokenomics and ICOs coming out all the time, so depending if you just want to keep it basic, you can do so. If you want to get more complex, depending on your budget and how much you can hire software developers for, then it really will depend. But then we also have the regulation. So ICOs have faced regulatory challenges and uncertainty in many jurisdictions. The regulatory framework for ICOs varies widely, and some ICOs may be subject to securities regulations depending on the nature of the token. So legals and the regulatory unclarity within this space is quite broad, and it does take legal expertise to understand the position for your company and the ICO and how you are looking to approach it. So depending on how you structure and how you form your white paper and the wording that you use will potentially depend on whether you are legally liable to disclose your token as a security or not. So again, this is something that you liaise with compliance and legals, and we can help you and facilitate that. So that's not an issue. IPOs, on the other hand, are heavily regulated and require compliance with securities laws. Companies must meet strict disclosure and reporting requirements to project investors' investor base. Companies must meet strict disclosures and reporting requirements to protect the investor's investor base. So when it comes to the investor base regarding ICOs, it often attracts a global and diverse range of investors, whereas there is no barrier to entry as to who can buy into the pre-sale, whether you go down the crowdfunding route, and who can buy into when it is public on the market, on the secondary markets. Anyone can actually buy into the token and believe in the business and potentially get paid out dividends depending on the tokenomics. And it can also include institutional investors. The process is relatively accessible with few barriers to entry. So as I said, ICOs, anyone can invest in. You can be in a third world country with a phone and you can buy regardless of where you are, and you don't have to do KYC or AML within most DeFi platforms, as obviously it's decentralized. So there's no governing party dictating what we can and can't do. Whereas with IPOs, typically the target market is institutional investors such as banks, mutual funds and pension funds, along with high net worth individuals. Retail investors can participate but may face limitations. So it's unlikely that you'll be able to buy into pre-sales when it comes to a big company launching on the stock market through an investment bank. It's very hard to get that sort of deal flow, whereas it's more accessible through ICOs. That was a short course on initial coin offerings. This was program 2 of Architecting the Future of Finance. Hopefully you found lots of value from that. Please do leave a like and comment and subscribe, as it does help the YouTube channel. I'll catch you in the next one.